Thanks for joining us at Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Markets just about managed to hold on to gains with some battered stocks in yesterday's trade making a comeback. Cafe Coffee Day's Enterprises stock is in lower circuit after the founder VG Siddhartha goes missing. Axis Bank, Hero MotoCorp and Tech Mahindra, the three nifty companies coming out of their first quarter numbers today. And Bank of Japan chooses to hold on to rates as focus shifts to FOMC members who begin their two-day meeting today. We'll get to all of that, particularly the Cafe Coffee Day founder missing story in just a moment. Quick check on how the markets are faring today. Yatin is here with a closer look at some of those stock movers.
Good afternoon, Harsha. And if you look at the markets at this point in time, clearly choppy. Right now, the market's almost flat. The key benchmark indices holding out. However, the Nifty Bank is underperforming second day in a row. As far as the banking stocks are concerned, private banks are looking at some sell-off, which is happening in early trade. As far as Nifty 50 is concerned, Bharti Airtel post its earnings is quite active. That stock is up 2.5%. We also have heavyweights like TCS and L&T gaining about 1.5% each. Also, we have Indiabulls Housing Finance and Eicher Motors among the Nifty 50 gainers. On the losing side, Grasim, after the 7-8% cut yesterday, again is witnessing some bit of pressure, 3% down for that one. Along with that, ahead of earnings, we have Hero MotoCorp stock down 3.5%, surprisingly. Dr. Reddy duly reacting to its earnings, which were below the street expectations, 2.5% down for Dr. Reddy's as well, and similar is the kind of decline that we are looking at for Yes Bank at this point in time. On the future and option side, RBL is one stock which is quite active, 6.5% down for that one. 420 is where the stock trading at. Idea Cellular, after breaking down the 10 rupee level, that stock is down on about 2.5%, went down as much as 8% intraday. 6.5 rupees where the stock is trading at. BEL post the earnings has seen a good bump up, 7.5% up for that one, and obviously the VG Siddhartha group companies, the likes of Sickle Logistics as well as Cafe Coffee Day Enterprises, those are the stocks which are down 20% each, locked in lower circuit.
We'll talk about that story in a moment, Yatin. Thank you for that. The recent sell-off has prompted a $600 billion fund manager to hold on to cash right now. Mihir Vora, the Chief Investment Officer of Max Life Insurance, told Bloomberg News that he currently is holding about 10% of total assets in cash. Nupur Acharya is here to tell us what really is the thinking behind one of the large insurance players.
So, Harsha, as you mentioned, as the stock report goes on, there's so much of volatility around the markets. Slowdown signs are pretty visible right now. So, as an insurance company, they are being really cautious right now. The average fully invested cash levels is 2%. So now it has surged closer to 10%, which was last seen during the demon time, that is November 2016. So as of now, risk off is what is on the mind of Mihir Vora.
What is he expecting for the economy, for earnings? When does he expect things to turn?
So, if you are an equity person, you'll always be bullish on things. So there is always a silver lining there. What he feels that this continuous rate reduction by the Reserve Bank of India would finally start showing up, and you would see a demand revival. Plus, we have seen that companies are not expanding, so there's an automatic deleveraging happening from the corporate side. So that should bring the economy to the sweet spot. Diwali or the festival season is very closely watched, and he feels that by then there should be some signs of a pickup.
Nupur, thank you so much for that. That's a large investor view on the market right now. But let's get to the top story of the day. Cafe Coffee Day stock has been stuck in lower circuit after the company confirmed that its promoter VG Siddhartha has indeed gone missing from last evening. Siddhartha, who's credited to have built India's answer to Starbucks in Cafe Coffee Day, had recently sold his own stake in Mindtree to L&T and was grappling with a fairly serious fund crunch. Sajid is here, and he's here to put the story into perspective, and the problem that Siddhartha finds himself right now. Sajid.
That's right. If you look at the Cafe Coffee Day group as a whole, they have been facing a lot of liquidity crisis, primarily because of the debt they had taken on board. The CCD group, through its real estate arm, had taken up a lot of real estate projects in and around Bangalore and Mangaluru. and as a result of which the total debt as at the end of March 31st was around 8,000 odd crores, and that was one of the reasons why Siddhartha decided to sell his stake, 20% stake in Mindtree to L&T to deleverage his books, at least the CCD books there. But it's more than that. He has other private arms which had more debt, it seems, but we don't have the exact details as of now. News that's coming in is that he's been missing since last evening, and now there is a major search operations underway in Mangaluru under the Mangaluru Police Commissioner to search for him, which involves divers, Navy divers, as well as NDRF team who are looking out for Siddhartha there. There is apparently a letter which has been floating around on various platforms which talks about Siddhartha being saying that he's sorry for letting down people, that he's not been able to create a profitable enterprise, he's failed as an entrepreneur, and there are other, he's named other entities and people in this letter. We couldn't verify the authenticity of the letter because neither the company nor the police could confirm whether this letter belonged to Siddhartha, but this letter is out in public and people are talking about it, so that's the reason we were just mentioning it here. So it's still a missing case as of now, till the time the Mangaluru police or otherwise confirm anything on this front. As we say, the stocks of VG Siddhartha Group, which is Cafe Coffee Day, Sikal, all are on a lower circuit because of this. And the management has come out and said that there is a professional management in place in these companies, and they will maintain business continuity as going forward till even as the search operations continue.
Sajid, thank you for that. Let's wait and watch how the story unfolds. Mumbai's Metro's lenders have agreed to a restructuring plan proposed by the Reliance Infra. Lenders led by Syndicate Bank are in the final stages of approving it. That's according to sources, though. Vishwanath Nair is standing by to give us some more details on the story.
Right, Harsha. So there's about a 2,200 crore loan exposure that some lenders have to this metro project. This is Mumbai Metro 1 Private Limited, which is the entity that manages the phase 1 of the Mumbai Metro project, which extends about 12 kilometers. The idea behind the restructuring plan is to extend the repayment period by about 2 years, as well as a reduced interest rate, which currently at about 11%, so that needs to come down to closer to 9% because that is what the industry is paying at this point in time. And this is something that the lenders have heard the company out and are willing to approve. So at this stage, the individual lenders are in the process of getting their board approval so that they can go ahead with the plan. But this company, Mumbai Metro 1, is owned, majority ownership is with the Reliance Infrastructure. They own about 69% stake. There's also MMRDA that holds stake in it, as well as Veolia, which is a French company that also owns about 5% stake in the company. So currently, this company has been going through a lot of stress. There has been a court case that has been pending in courts where Mumbai Metro 1 fought against reducing the fares that the company was earning. Remember, the company is earning enough to have maintenance, but not enough to actually repay its debt. So that fight is going on. The company also tried S4A in 2017. That didn't work out. So the hope is that once this restructuring plan goes through, then they will be able to manage their finances better.
Vishnu, thank you so much for that. Big IT companies may have found some firm ground in the first quarter, but mid-cap companies are clearly missing the bus. Almost all IT players in that segment reported a sequential drop in their numbers. Agam is standing by to tell us why mid-cap IT companies seem to be struggling.
All right. Well, Harsha, there certainly seems to be some weakness that's evident in the earnings of these mid-cap IT companies. And to tell you a little more about that, let's take a look at the numbers. So as you can see, when it comes to your sequential growth in rupee terms for your revenues, well, except for Emphasis, we're either looking at flat movement or a decline in revenues. And of course, to a certain extent, Emphasis is well, positively impacted because it's fully hedged, and we have seen an appreciation of the Indian rupee. And why is it that we are actually seeing a decline? Firstly, because our clients for now are tightening budgets, and we're also seeing a little less IT spends. There is also a delay in decision making, and of course, let's not forget, for certain companies like Persistent Systems, there's also lumpiness in revenues and deals, which the company has suggested that there may be a delay as far as the realization of those revenues is concerned. But more importantly, we have seen a sharper decline in margins on a sequential basis. And once again, if you leave emphasis out, as you can see, we are looking at significant cuts when it comes to their operating margins. Emphasis does not get impacted once again because of the fact that it is fully hedged. All its revenues are completely hedged. So currency will have virtually no impact on the revenues or margins for that matter. What is the reason behind the contraction in margins? Well, of course, we are going to see a lot of these companies will take wage hikes. There's also higher visa costs. Where the costs of your H-1B visas have risen substantially. And of course, the Indian rupee, which has appreciated against the US dollar. And considering a lot of these companies may have their revenues realized in US dollars, well, this, of course, is bad news. But moving on, let's take a look at how these companies have done. So on a year-to-date basis, while the Nifty IT index has advanced by 6%, that is largely on account of the gains that we have seen in your larger companies such as TCS, Infosys, and HCL Technologies. On the other hand, we have seen a considerable decline for the likes of Tata Elxsi, Cyient, for that matter, even something like Lenti Infotech. And IT Technologies is the only one which did close in the green, or is currently trading in the green, giving advances. Based on that, and that is probably the only reason why the analysts are currently giving an upside to a lot of these companies from current market levels. So as you can see, analysts still believe that there is a potential for these companies to move on and move upwards as far as the share prices are concerned. That said, we can't really rule out the fact that it has been a very weak quarter for a lot of these companies, and we're going to have to wait and watch whether or not they actually move up according to what the consensus is indicating.
Yep, not looking good for the mid-cap IT tier. Thanks, Agam, for that. Automakers, meanwhile, have little to cheer as well in July. A Bloomberg Quint dealer survey suggesting that sales will continue to decline this month. Yash is standing by with the details of what that survey revealed.
That's right, Harsha. So there seems to be no end to this continued slowdown in auto sales, and for yet another month, most of the dealers tell me that sales are likely to be weak. But without wasting any further time, let's take a look at how the numbers would be for the passenger vehicle space. And for both Tata Motors as well as Maruti Suzuki, the sales could see a drop of almost 20 to 21% on a year-on-year basis, given the high base of last year. For M&M, it has a relatively low base compared to the other players, but some of the new launches, they would be aiding the volume. So on a percentage basis, that drop would be lower as compared to the other two names, but about 8% is what the sales could drop by. But do keep in mind that in absolute terms, the sales have fallen to at least a two-year low. Around 45,000 units is what they have been doing for the past several months now. As far as the two-wheeler space is concerned, most of the players, barring Bajaj Auto, could see again a double-digit drop in sales on a year-on-year basis, anywhere between 11 to 13% for Hero, MotoCorp, TVS, as well as Royal Enfield. Bajaj Auto has been steadily doing well. The strength in the export business, as well as continued sale of its Pulsar line of bikes, that is doing very well. So could see a marginal drop for Bajaj Auto, but not a whole lot given the other key players. But some of the key issues that have been at the center for the month of July, we know that it is a seasonally weak month because most of the buyers, they tend to stay away from making any new vehicle purchase ahead of the monsoons. But the trend, which had been positive for a couple of months, at least sequentially, that seems to have reversed once again in the month of July, as most of the dealers say that not only on a year-on-year basis, but even over the previous month, sales are likely to drop, with consumer sentiment being at a multi-year low. Now, financing was a key issue over the last 8 to 10 days after there was a report from Motilal Oswal on how most of the banks, they have cut financing, but that's not really the case. They have become extra cautious in terms of lending against the inventory to most of the dealers, and this is a problem which is not specific to any particular brand or a region. In fact, we were earlier assuming that it would impact the smaller dealers, but it is something that is industry-wide and not subjective, and that irrespective of the size of the dealership, the problem is there because most of the dealers were not adhering to good financial practices and were highly leveraged as well. From the industry point of view, there are several reports floating that how a lot of dealerships have shut shop, but that was also because of the aggressive expansion in terms of touch point, be it Maruti's, the Nexa Arena showrooms that created the sort of infrastructure which overloaded the system, as a result of which several dealerships sprung up in the same locality where there were just one or two dealerships, which prompted most of these dealers to take up discounts in order to liquidate their inventory and pay off the banks. And this stiff competition has taken a toll on most of the dealerships, is why we've seen that shutdown.
Interesting that. Yes, thank you for that. Top bosses at some of the country's largest consumer companies are feeling the pinch. Target-driven variable pay of 3 out of 6 CEOs fell last year. That's according to their respective annual reports. Charlene D'Souza has done some number crunching to tell us how it's looking for CEO pay.
Yes, Harsha, the variable or the target pay of FMCG CEOs were impacted as consumption started to show towards the end of consumption slowdown, in fact, started to show towards the end of the previous financial year. Now, heads of Hindustan Unilever and Godrej Consumer Products saw their variable pay decline, while Varun Berry of Britannia and Marico's Saugata Gupta saw their variable pay remain stagnant. However, ITC's heads and Asian Pay's heads saw their variable pay increase. Now, HUL Sanjeev Mehta's variable pay declined by more than half, which also had dragged his total take home to 18.88 crores in FY19 compared to 19.4 crores in the previous financial year, that is FY18. While Godrej Consumer Products Vivek Gambhir saw his variable pay decline considerably and took an overall package, and his overall package stood at 13.1 crore in FY19. Now, Marico's Saugata Gupta's FY19 package declined last financial year, while his variable pay remained unchanged. However, Varun Berry's take-home package was higher by around 5% and his performance-linked pay but remained the same as that of FY18. Now, KBS Anand of Asian Paints and ITC's Sanjeev Puri saw their variable pay and salaries go up in FY19. KBS Anand took home a total of 11.81 crores, while Sanjeev Puri took home a total of 6.16 crore in FY19.
Thank you for that, Charlene. A low base is likely to aid Axis Bank's net profit growth by over 2.5 times. A key thing to watch out for will be recovering from the write-off pool. Shafali Malik is standing by to take us through the expectations from Axis this time.
We can expect healthy set of numbers from Axis Bank for the first quarter. We are expecting the net interest income to come in at about 5,965 crore rupees. That will be a growth of about 15% on a YY basis, and pre-provisioning operating profit growth as well is expected to be a strong number of about 16%. Profit is expected to jump by a whopping 165% to about 1,855 crore rupees, and even on a sequential basis, it's expected to be a strong growth for the bank. The factors that we'll be looking forward to, various brokerage houses have a very wide range of estimates when it comes to the loan growth that is being expected from the bank. So the number is as low as about 13% to as high as about 18%. So that is one number that we look forward to from Axis Bank. For ICICI Bank, it was about 15%. And a couple of banks have disappointed when it comes to the loan growth in the first quarter. So we look forward to that keenly from Axis Bank. Deposit growth is expected to be around 24%. So that's also expected to be a very strong number. So last quarter, it was to the tune of about 21%. So it's expected to jump quite meaningfully from that level. Margins as well expected to remain stable at about 3.4%. And slippages is one key figure that we'll be looking forward to. In Q4 of FY19, it was about 3,000 crores. This time around, we are factoring in a number of about 2,400 crore rupees from Axis Bank. So that number will be taken well by the street. And also, we can expect a strong traction to come in as far as the recoveries are concerned, and especially from the written-off pool of assets. So that's what broadly we'll be looking forward to from Axis Bank earnings today.
Shafali, thank you. The automobile slowdown is not going to spare Hero MotoCorp as well. While a 3.5% volume growth this quarter may cushion some of those losses, margins are still likely to fall over 1%. Yatin is back here with us to take us through the expectations of Hero MotoCorp this time.
Afternoon, Harsha. And if you look at Hero MotoCorp, this time the revenue growth would be under pressure. In fact, we are expecting a decline of 7.5% on a year-on-year basis. largely to do with the fact that we are expecting a 12.5% decline in volumes. That would be putting pressure on the revenue growth. However, some cushion would be coming in because of the realization growth, which is expected to be in the range of 4 to 5%. As far as absolute EBITDA is concerned, a double-digit decline seen there, along with the profits, to do with the fact that the negative operating leverage plays a part. Lower volumes and higher discounting in the marketplace is something that would impact the overall operating performance of the company. Margins are also seen declining by 100 to 150 basis points on a year-on-year basis because of the same reasons. Of course, the management commentary on the demand outlook, especially in the near term at the start of the festive season, is something important to watch out for as far as Hero MotoCorp's earnings are concerned. The conference call is there today evening, post the market hours around 6:30 p.m.
Yasun, thank you for that. Last on our list is Tech Mahindra. The first quarter is likely to be a muted one, while it will be also bear the brunt of wage hikes and visa costs. Seasonal weakness may also, in some of its subsidiaries, also likely to impact the top line. That's what the market is pricing in. Agam is standing by with some of those expectations.
Right, Harsha. Well, we are expecting a very quiet quarter for Tech Mahindra. Starting off with the top line, expecting a decline of around 1.3% in dollar terms and 1.7% in rupee terms. EBITDA margins, or rather EBIT margins, are expected to contract as well at around 13.3% against 15.4%. Consequently, profits could also decline sequentially by as much as 12.5%. Now, we are expecting the company to retain its growth outlook of about 6 to 8%. That itself is very muted, and we are expecting a delay in deal ramp-ups. There will also be a delay in decision making from a lot of clients, which will impact top line. As far as the largest telecom business is concerned, we're expecting a 2.5% decline because the rollout in 5G is still quite slow as far as Europe is concerned. That is something that the company was counting on. However, when it comes to the other aspects, we also have seasonality in Comviva, and of course we are expecting that margin contraction on account of wage hikes, Indian rupee appreciation, as well as higher visa costs. Finally, we are keeping an eye on the company's M&A strategy as well as demand outlook going forward, especially the telecom vertical. But on the whole, we're expecting a very quiet quarter from Tech Mahindra.
Agam, thank you for that. The much anticipated trade talks between US and China resume in Shanghai today. Nothing concrete is expected out of these talks, as both sides are unwilling to budge from their respective stances. Bloomberg's News' Tom McKenzie spoke to Sam Kono of Stonehorn Global Partners to find out if the pains are visible on their investments in China.
Could feature heavily in discussions as the US and China resume those trade talks later Tuesday after a 2-month pause. There is little expectation of anything other than a broad framework for further negotiations. The two sides are holding their first face-to-face meeting since May, but key differences remain, of course, and neither team shows any inclination to compromise. Still with us is Sam Lecornu, Stonehorn Global Partners and co-founder and CEO. Sam, are you starting to see, and to what extent are you starting to see the trade pain show up in some of your portfolio companies?
Yeah, I mean, capital goes where there's confidence, and right now there's a lack of confidence in some of these, Chinese names, and you only have to look at some of the names which are on the Nasdaq. I think hedge funds are having a bit of a field day at the moment based on the noise that's coming through. We're seeing some of the opportunities actually on some of those ADRs. Some of them have very, very strong net cash positions, and they've already been sold off quite aggressively. So we're taking a long-term position on that. What happens with the current trade talks? I think the major sticking point for that one still is the structural reforms in China. I think the US wants them to wane off some of the subsidies that they give via state-owned enterprises, and also the subsidies that they give to, say, new technology industries such as batteries and AI, etc. But I just don't think that that's going to be on the bargaining table. China requires that sort of, subsidy programs and support to continue to keep its economy going on. They're just in a different stage, I think, of development than some of the other developed nations are. So that's the sticking point. The other ones, in terms of reducing the tariffs, not too difficult to reverse those.
Okay, that's a view on US and China. Meanwhile, the Chinese agency overseeing Hong Kong's administration has warned protesters of a crackdown. This after yet another weekend of chaotic protests. David Tweed of Bloomberg News brings us more from Hong Kong.
Well, among the protesters, what we saw last night was that Telegram, which is the encrypted messaging system that they've been using ever since these protests began here in Hong Kong 8 weeks ago, was alive with plans to actually have two types of civil disobedience. One of them is to come out onto the streets of Hong Kong in cars and to drive very slowly, thus disrupting the traffic, which is why we're out here overlooking some of the central thoroughfares of Hong Kong leading into the central business district, to see how effective they're going to be. The authorities are taking it quite seriously. We've heard that the bus companies have implored the bus drivers to really continue to drive according to the rules, not to speed, not to do anything to actually break the rules. So they're taking that aspect very seriously. The other civil disobedience which has been planned by the protesters is to go into the MTR. Now, this is the underground rail system, which is the lifeblood of Hong Kong, and there are plans to go into one on the other side of the harbour in Kowloon, near Kowloon, to actually go into one of the key change points at the MTR, and to block passengers trying to get on the trains, or to block the closure of the doors. Now, this is a risky. Both of these types of protests have risks attached to them, and that is to put the public offside. Remember, back in 2014, when we saw 3 months of central Hong Kong occupied by protesters, a lot of the public who supported the protests at the beginning became very irritated towards the end, because they simply couldn't go around doing their business in Hong Kong. So I would say that's one of the risks of both these types of civil disobedience which have been planned for today.
David Tweed reporting on the situation in Hong Kong. Out of time on the show. Thank you so much for joining us on lunch. Keep watching Bloomberg Quote.